We're going to go ahead and get started. I'm going to share my screen here. We'll flip over to the content. And can you guys all see my screen now? Should be the CompuCram website with property ownership, land use controls, valuation, all that kind of good stuff. You guys see that?
Yes.
All right, great. Thank you. All right, so before I pick a topic, is there anyone that has a topic that they would like to have covered today that maybe they're a little bit confused about or need some additional help with?
My area of trouble is the finance. It's the math within finance and those sections.
Gotcha.
That's where I'm stumbling. That's where I've had most of my trouble.
Gotcha. Well, we'll do some practice questions for finance. Tony and Adonis, either of you have any suggestions for content tonight after we do finance? Or should I just pick some random topics after finance? You can always type it in the chat too if you don't want to come off mute. So we're going to go ahead and do a practice test for finance. Here we go. So as usual, I'm going to read the question to you, read the different answers that you can select from. And then if you want to put your answer in the chat, that would be great. And then we'll reveal the correct answer and I'll give some explanation depending on my level of comfortability to do so. Keeping in mind that a lot of the content that you learn during CompuCram, during real estate licensing, you'll probably use about 5 or 10% of that in the real world. If you feel yourself getting frustrated or if it seems challenging to memorize, keep your head up, get through the licensing. I promise you're not going to be on a showing appointment with a client and they're going to be looking around the house going, can you tell me how many square feet are in an acre? It's not going to happen. All right, so here we go. Question number 1. A buyer's purchase and sale agreement contain a finance contingency. The buyers applied for a loan with a local lender who verbally informed them that their loan application was denied. The buyer's agent should A, ask the sellers to provide a purchase money loan instead. B, tell the buyers about the right to receive the denial in writing. C, terminate the agency relationship. Or D, have the sellers extend the contingency deadline. And you can go ahead and put in the chat A, B, C, or D. Hi, Deborah. How are you? Welcome to the study session.
Hi, thank you. Muted.
All right, that's okay. You don't have to answer, but we're going to go ahead and I think it's have the sellers extend the contingency deadline because that's what I would do.
I'm actually trying to
incorrect.
figure out where to put that in the chat section.
Yeah, there should
type that in.
There should be a button somewhere that says chat. So the correct answer was tell the buyers about their right to receive the denial in writing, which is also correct. Under the Fair Credit Reporting Act, when a lender takes an adverse action on the basis of a credit report, they are required to be informed in writing. So if you've ever done a credit report for anything, whether it's a house or a car, you can notice in the mail in writing a few days later, letting you know why you weren't or why you were approved for said loan. So next question. The Real Estate Settlement Procedures Act, or RESPA, applies to A, commercial and residential mortgages, B, seller financed transactions, D, contracts for deed, or D, residential first mortgages. You can enter that in the chat. Make sure I'm letting in all the participants here. The RESPA applies to commercial and residential mortgages, seller finance transactions, contracts for deed, or residential first mortgages. All right, Deborah thinks it's A, commercial and residential mortgages. I'm gonna agree with Deborah. And we were both wrong, Deborah. It's residential first mortgages. So the rationale is RESPA applies to mortgages secured by a dwelling with up to 4 units. It does not apply to commercial transactions or seller financing. So there you go. Residential only, not commercial. Learn something new every day. All right, next question. A mortgage often includes a clause requiring the lender's consent before another borrower may assume the mortgage. This clause is called A, power of sale clause, B, subordination clause, C, defeasance clause, or D, alienation clause, or due on sale. What's everybody think? Eric thinks subordination, which would be B. I'm going to agree with Eric on this. And we were both wrong. It's alienation clause or due on sale clause. Deborah got it right, though. Good job, Deborah. An alienation clause or due on sale clause prevents assumption without the lender's consent by stipulating that the loan balance is due and payable in full if the property is sold. That's the alienation clause. All right, next question. When a borrower makes payments on a fully amortized loan, their debt service payments will cover A, only principal on the loan, B, principal, interest, taxes, and insurance, C, only interest on the loan, or D, both principal and interest on the loan. So this is a fully amortized loan. The debt service payment, what is it? What all does it cover? All right, we got 2 D's and a C. Let's go with D on this one. D is correct, both principal and interest. Fully amortized loan is repaid through regular payments that include both a portion of the principal and interest. The final payment will pay off the principal balance, leaving no need for balloon payments. So if there is C, if you see a question that that talks about interest only loans, that actually is a thing. So C could be the correct answer for a different question, and that question would be when the borrower makes payments on an interest only loan, their debt service payment will cover only interest. It's very rare cases that you'd see that in the residential world, but it's if someone wants to make interest only payments to keep their monthly payment extremely low. But the problem is if they pay on that for any amount of time, the principal balance is not decreasing as they make their payments like a normal mortgage. Next question. Usury laws fix which of the following? A, minimum interest rates, B, maximum interest rates, C, length of time for payment of loans, or D, loan to value ratios. What do you think? Do they fix minimum interest rates, fix maximum interest rates, fix length of time, or fix loan to value? Eric guesses D on this one. Sure, let's pick that. My gut tells me C, but I could be wrong. Nope, it's B actually. Maximum interest rates. So usury laws fix maximum interest rates. Next question, a mortgage that uses both real and personal property to secure the borrower's debt is A, deed of trust, B, package mortgage, C, budget mortgage, or D, reverse equity mortgage. What do you think? Jamal says D. We'll try that one. Nope, it is package mortgage. A package mortgage includes both real and personal property as collateral. An example of this would be if you're purchasing a vacation home and it is a fully furnished vacation home. So it's got all the furnishings inside the home and maybe a boat trailer as personal property that it's being lumped in. Doesn't always guarantee that it's going to increase the value of the home with respect to an appraisal, but it is a mortgage that would cover the total package. Next question. After buying property at a sheriff's foreclosure auction, which document would a person receive to prove they are entitled to the deed upon confirmation of sale? Is it A, certificate of no defense, B, certificate of sale, C, certificate of habitation, or D, certificate of title? What do you think? Tony's going to guess D. Let's see if Tony's right. It is certificate of sale. So for a sheriff's foreclosure auction, certificate of sale issued to a buyer at a judicial sale by the court. Certificate of no defense, also called an estoppel certificate, is a legal instrument used by a mortgage to stop the mortgage of a certain date when the mortgager agrees to that mortgage balance is correct. And a certificate of habitation would be an occupancy permit issued by a local government. So, fun fact, if you're on the east side and you sell homes in Wickliffe, Ohio, right? Every purchaser of a home is required to get a certificate of habitation, which the city of Wickliffe calls a registry for vacancy. They put a different spin on it, but that's what it's called. So keep in mind the buyer, if you have a buyer that's purchasing a home in Wickliffe, they got to pay $60 to the building department to get the occupancy registration. Fun fact for you there. All right. Which of the following persons could be eligible to receive a VA loan?
Quick question on that last one.
Yeah, go for it.
In the real world, is there any occasion where they would halt that? And what case would they do that under?
Yes, there is. So on the east side more than the west side, some communities and local municipalities have what's called a point of sale inspection. If you've ever heard of a point of sale inspection or a POS inspection, it's a sometimes even just an external visual inspection of the property to make sure that the condition of the property is an acceptable condition to transfer ownership. If the point of sale has not either been satisfied and all the different items corrected, or the buyer has signed an addendum saying that they are going to assume responsibility for those items by a certain date. If one of those two things hasn't happened, they will not issue the certificate of occupancy or registration for occupancy. Great question. Love the real world scenario questions. Those are way more fun.
It helps me remember why.
Yeah, for sure. All right, next question. Which of the following persons could be eligible to receive a VA loan? A veteran or deceased veteran's child. B, a veteran or deceased veteran's unremarried surviving spouse. C, a veteran or a deceased veteran's child or unremarried spouse. Or D, only a veteran themselves. Ooh, tricky one. What do you guys think? Tony guessed D, only the veteran. Eric guessed A. Asif guessed A. Let's go with A. See what that comes about. Correct answer is a veteran or a deceased veteran's unmarried surviving spouse. So if the spouse marries another person who's not a veteran, they would not qualify. They purchase a home before they remarry, then they are eligible for a VA loan. VA loan is a unique vehicle that is backed by the federal government rather than a lending institution, and in most cases require 0% down payment. That veteran would only be cover closing costs. Additionally, there's additional appraisal that would need to have happened by the VA lender's appraiser as well. So a couple of fun facts there for real world experience. All right, next question. A buyer's agent has repeatedly seen sales collapse at the last minute because the buyers weren't able to obtain financing. How could he best limit this in the future? A, refer buyers to a specific lender. B, qualify all prospects himself. C, show lower priced properties. Or D, require prospects to be approved first. What do you think? Yes, correct. See, a lot of the times when you're selecting the answer, you're selecting the best answer. So, or the most correct answer. All right, we've got 3 people saying it's D. Let's check it out. Correct. The correct answer is D. Getting pre-approved for a loan before beginning the house hunting process is now standard procedure. This way, the buyer knows in advance the maximum amount he or she can afford from the bank. Good job, everybody. Next question. An investor wants to invest $250,000 in the development of a strip mall by taking a loan secured by a residential property that he owns. Will the Truth in Lending Act apply to this transaction? A, no, because this is a commercial transaction. Yes, because the loan is secured by residential property. Yes, because the loan is for less than $500,000. Or no, because the loan is for more than $50,000. Asif thinks it's A. Let's check Asif's work. You are correct. Good job, Asif. The Truth in Lending Act covers consumer loans, loans used for personal, family, or household purposes, not in a commercial transaction. Oof, we didn't do so hot, guys. What did we get? 30%? Yikes. Let's go practice test. You guys want to do another one? Yeah, Eric, ouch. You guys want to do another one on finance since we did so terribly on this one? Or do you want to pick a different topic? What do you think? Should we try again?
Since we
We'll
did
do one
poorly,
more.
yes.
Yeah, we'll do one more.
Yes.
Yeah, we'll do one more on finance and then I'll ask the question again. So, all right. A promissory note that is secured by a mortgage is A, primary evidence of the debt, B, a defeasance agreement, C, security for the loan, or D, a guarantee of payment. All right, Eric thinks it's C. I think I agree. Nope, Eric, we're wrong again. Primary evidence of the debt. The rationale, the note is evidence of the debt. The mortgage makes the property secured for security for the debt. It's a tricky question. Which of the following clauses relates to a mortgage loan default and requires immediate payment of the debt? Writ clause, subordination clause, C, safety clause, or D, acceleration clause? Eric says D. I'm going to agree with Eric. And that is correct. Acceleration clause allows the lender to accelerate the loan. Oh, I got somebody in the waiting room. Accelerate the loan payment to all be paid on the very next month. Next question. Which of the following is an advantage of using private mortgage insurance from a borrower's perspective? Which of the following is an advantage of using private mortgage insurance or PMI from a borrower's perspective? A, it protects against default. B, it reimburses a borrower for property damage from problems like flood or fire. C, it protects the buyer's title against other claimants. Or D, it allows for a smaller down payment. What do you guys think? D, D, B?
A.
You think it's A? Protects against default? Let's check your work.
Oh,
It allows for a smaller down
down
payment.
payment. Oh my God.
Yeah. Yeah. So if you look at it like this, so PMI is required for any mortgage that a buyer takes out that is under, I believe, that's under, I believe, 20%. Actually, does it say in the rationale, private mortgage insurance allows the borrower to buy the house with a lower down payment, which is an advantage. Without private mortgage insurance protects the lender against borrower's default. The lender would probably require a lower flow chart. Yeah, so I'm pretty sure it's 20%. So if you have a borrower take a loan out and they're putting less than 20% down, they have to get private mortgage insurance, right? So if they can either, so let's say the home is $300,000, right? They're taking a loan out to purchase a home that's $300,000. If they put 20% down, they don't have to get PMI, but to put 20% down, they have to come to the closing table with a $60,000 down payment, which is 20% times 300,000. They could, through that same lender, potentially get a 5% down loan, right? Which is only 15,000 compared to 60,000. Now they would be required to get PMI because they're putting less than 20% down. They have less than 80% loan to value, but they're saving $45,000 at the closing table. Their monthly is going to be higher, but it can lower their down payment. Make sense?
Mhm.
All right. A purchase and sale agreement is for $150,000 with 80% financing closing in 30 days with possession at closing, and a rent provision for possession after closing. This is an example of a contract with contingency, B, acceptance, C, unilateral contract, or D, counteroffer. What do you think? Asif says C. We're going to go with C, but I think it's B. I think B is the correct answer on this one. That's what my gut tells me. Nope, it is contract with contingencies. See, this is kind of a confusing question because technically there is a financing contingency. There's a possession contingency, right? They've got 30 days after closing, and a rent provision. The rent provision is what's throwing us off because the rent provision is not a contingency. That's just an accepted piece of the contract. So contract with contingencies, that's definitely a confusing one. Let's read the rationale. This is a question that is best answered by the process of elimination. Acceptance is too vague to be a good answer. So I thought it was acceptance, but apparently that's too vague. There's no mention of a counteroffer. Yeah, we all knew it wasn't counteroffer. Nor does unilateral contract apply, since a purchase and sale agreement is a bilateral contract, not a unilateral one. Therefore, you can conclude that the contract with contingencies is correct and financing is a contingency here. So, kind of splitting hairs, but A is the most correct answer, even though acceptance is correct but too vague. So sometimes you got to pick the best answer, not just the right answer. Next question. Interest on a loan for a home purchase is which type of interest? A, simple, B, compound, C, annually paid, or D, complex? Excuse me. All right, simple is correct. The interest paid on a real estate loan is simple interest. No, you cannot pay your interest only once a year annually. Good luck trying that. Unless you pay in advance, I suppose. Which of the following is a primary market lender? A, a mortgage broker. B, Federal Housing Administration. C, Veterans Administration. Or D, mortgage banking company. What y'all think? We got a D, we got a B. Let's go mortgage banking company. Mortgage banking company is correct. A mortgage banker is a primary market lender, meaning that it originates loans directly to property buyers. Under the traditional distinction between a mortgage banker and a mortgage broker, a mortgage broker negotiates loans, bringing borrowers and lenders together for a fee, but unlike a mortgage banker, is not a lender. And when you purchase a VA loan or an FHA loan, the Veterans Administration or the Federal Housing Administration is not the lending institution itself. It's just who is backing financially the loan. All right, which of the following would be most likely to happen in a land contract? A, the vendor pays the property taxes, insurance, repairs, and upkeep of the property until the final payment is made. B, the vendee receives possession and the vendor retains equitable title. C, the vendor retains the title to the property until the final payment is made. Or D, the vendor finances the property and makes installment payments. What do you think? Let's try B. B feels right. Oh, Asif says it's D, so we'll go that route. It is actually C. Deborah was correct. Good job, Deborah. The vendor retains the title to the property until the final payment is made. In these situations, remember that vendor and vendee can be very confusing. If you just remember that the vendor is the seller and the vendee is the buyer, that can definitely help. And the word possession is also a little bit tricky when you have someone who's like renting a home on a land contract, because you would think your gut would tell you that possession is the person who's living there when that's not correct. In a real estate transaction, the person or entity that has possession is the owner, not the lessee or the vendee. Next question. Which of the following loans would be subject to the Truth in Lending Act? A loan to buy a 20-unit apartment complex. A loan to a first-time home buyer, which is B. C, a loan to a residential subdivision developer. Or D, a loan to a homeowners association. Eric thinks it's B, and so do I. Everybody thinks it's B. Deborah, Asif, it is correct. Truth in Lending Act only applies to consumer loans, not to commercial loans. Next question. For which of the following people would an adjustable rate loan not be a good idea? A person who will live in the house only a short time. B, a person about to retire. C, a person whose income is expected to go up soon. Or D, a person planning to refinance after several years. Which of the following people would an adjustable rate mortgage loan not be a good idea for? Deborah says B. Asif says A. I'm thinking it's either B or D, is what my gut tells me. Let's try B. B is correct. Does everybody understand why? Like, why wouldn't that be good for someone who's going to retire? Someone who's going to retire is likely to want fixed expenses. And if the interest rate is fluctuating, that's no good. Yep, Eric, their income will likely be fixed. So if a person who's going to live in the house only a short time, who cares what the interest rate is, right? Or what it changes to? Person whose income is expected to go up soon, adjustable rate mortgage might be really great in that situation, right? Because it gives them, historically, adjustable rate mortgage, it gives them a lower interest rate for the first 7 years. And then after that, it can go up. A lot of people, once you get into the business, might think just a conventional 30-year fixed rate mortgage is the best route to go on every transaction. Not always the case. had a buyer just last year that got an adjustable rate mortgage on a $980,000 property out in Roaming Shores, Ohio. And his kids were going into, their kids were going into middle school, and they plan on selling the property after just 7 years because they want a vacation home on the lake to have while their kids are in middle school and high school, right? Makes sense. Well, they're going to have a lower interest rate while they own the home for 7 years. And then after the 7 years is up, they can sell the property. After paying a smaller payment, they can refinance into a 15-year or 30-year or 20-year fixed if the interest rates are down. If the interest rates are higher on a fixed rate than their current ARM that they're getting now, then they can stick with what they have and hope it doesn't fluctuate. All kind of options with an adjustable rate mortgage. So just got to do what's best in the best case scenario for each individual buyer. Hopefully that helps. Like to give a little real world scenario stuff as we go through this. All right, next question. A loan is set up so that the borrower's payments are the same size each month. Each payment is partly interest and partly principal, and the loan's balance at the end of the loan term will be zero. Which type of loan is this? A, straight note, B, partially amortized, C, reverse annuity, or D, fully amortized? What do you think?
Fully amortized.
Fully amortized, D. I agree with you. You are correct. Just a fun fact. Life is what happens when we're busy making other plans. This doesn't mean that the payment will never go up, because guess what? Every 6 years in Cuyahoga County, your taxes are going to get reassessed based off of home values. If you've owned your home longer than 6 years, you know that. So your interest and principal might stay the same for the 30 years, as long as you don't refinance or default. But that doesn't mean your payment's not going to go up, because a lot of mortgage lenders like to put interest payments in escrow. So you're paying when you pay your mortgage payment, you're paying into an escrow account, and then once a year or twice a year, the money comes out of your escrow and goes to the tax man. So just a word to the wise there. All right, how'd we do? Did we do better than 30? Hey, we got 60 this time. Still failed, but we did twice as good. Oh, good. Great job, everybody. All right, what should we do now? We got 15 minutes left. We probably have time for 1.5 different sessions. Should we stay in finance? Should we go do something else for a few minutes? What's everybody want to do? Here are the different, I don't know if you can see that. Maybe I can zoom in on it. Nope, can't zoom in. All right, Asif says something else. You want to do licensing requirements, real estate calculations, the practice of real estate's always a good one. A lot of questions on that. Is there any math? Real estate calculations would be a good one if there's math. If you want to do math. That's my worst area. Anybody opposed to doing some real estate calculations? Eric's over here putting me through the ringer tonight. That's okay.
I'm
It's all
not
about you.
opposed, but I don't think I'm gonna do very well, but we'll see.
Well, that's probably why we should do it then. All right. Stay where you're uncomfortable. That's the best way to study. All right, here we go. All right. First question. A property's net operating income is $12,000 per year. If an investor wants a 12% rate of return, how much is the property worth to him? A, $1,440, B, $1 million, C, $144,000, or D, $100,000.
Oh, that's per year. The best wants to always. 12% rate. Hold on.
So another way to ask this question is, what is 12,000 12% of?
So that's 1,440. Okay, so that's. So wants a 12% rate of return. How much is the property worth? But
Tony says D. Tony says D. Let's try that. And that is correct. Use the capitalization formula, income over capitalization rate equals value, to find the property. So when I said, what is 12,000 12% of? It is $100,000.
Oh, okay.
Mm-hmm.
12,000 per year if investor wants 12% rate of return. Okay.
Yep. Got it. Tricky. Yeah, they're tricky. All right, next question. Zoning requirements state that a lot must be at least 4 times the size of the building located on the lot. An architect draws up plans for a building that is 20,000 square feet. At least how many acres does that lot need to be? So if a lot needs to be 4 times the size of the building and the building is 20,000, that means that the lot needs to be how many square feet?
At least 4?
So 4 times 20,000, correct. So that'd be 80,000 square feet. Good job, Eric. You see how I got that, Deborah?
Which you multiplied. No, I don't see how you.
Yeah. So like this person is buying. It wants to erect a building on a
Uh-huh.
piece of land, right?
Mhm.
So the building that they need for their, call it a factory, needs to be a 20,000 square foot building.
Mhm.
The land that's zoned says that the lot that the building goes on has to be 4 times the size of the building.
Okay, so
So
4
you,
times 20,000 square feet.
exactly. So that means the lot has to be 80,000 square feet because it's got to be 4 times the size of the building. So that means at least how many acres does the lot need to be? 1, 2, 3, or 4? Well, in order to know
4.
this, you have to know, in order to know this, you have to know how many square feet are in an acre, which I believe is like
52,680.
but yeah, 42,680, right?
42,680. Okay.
So if it needs to be 80,000 square feet, how many acres does it need to be? If it's 42,000 and change, 2 acres, right? And that is correct. Multiply the building size by 4 to find the minimum square footage of the lot. We did that, $80,000. There are 43,560 square feet per acre. So in order to exceed the required 80,000 square feet, you need at least a 2-acre lot.
Okay.
All right, next question. A living room needs to be recarpeted. It measures 18 feet long by
Okay.
15 feet
Okay.
wide. How many square yards of carpet will need to be purchased? Well, let's figure out the square feet first. How do you figure out the square feet of that room? You multiply what by what?
18 by 15.
Yep, so that's 270 square feet. So how many square yards, though, of carpet will need to be purchased So 18 times 15 is 270. And then you got to figure out how many square yards of carpet will need to be purchased. Well, how
Oh.
many square feet are in a square yard, you ask? 9. There's 9 square feet in a square yard. So then you take 270 square feet and you divide it by 9 square feet. So then that's 270. Yep, 270 divided by 9 is 30. Everybody understand that? 30 square feet, or excuse me, square yards.
Yeah.
And if you think about it, you know that, like I always like to use visuals, right? So visually, if you look at, that a square yard is 3 feet, right? So 3 feet by 3 feet, you can fit 9 square feet into that 1 square yard. So when you're going from square feet to yards, you divide by 9 because there's 9 square feet in a yard. All right, next question. If a property generates a gross rental income of $200,000 and a sales price of $3 million, what is the gross rent multiplier? Oof, I did not like this question. If a property generates a gross rental income of 200,000 and a sales price of 3 million, what is the gross rent multiplier?
What's the formula for this? I don't even know.
It's a great question. I don't know either. I guess we're just going to guess and then figure out the formula once I guess. Somebody guessed 15. Eric guessed 15. You are correct, Eric. So the sales price divided by the rent equals the gross rent multiplier. So the formula for this is sales price divided by gross rental income. 3 million divided by 200,000. Easy enough, right?
Yeah,
Yeah.
once you know the answer.
I
Once you
remember
know
that
that,
one.
Good, good. All right, next question. A borrower is purchasing a $300,000 home. They will be using a loan with an LTV of 80%. Everybody knows what that means, LTV, loan to value. So means they're putting down 20% and they're borrowing 80% of the loan. So if it's a $100,000 loan, they're putting down 20, they're borrowing 80. They will also be paying 3 discount points. What is the total amount of cash that they will need to bring to closing? So first, they're putting 20% down of 300,000, which
60.
is 60,000. Yep.
And then 3 points.
And then what does 3 points cost on a $300,000 home?
I don't know. Is it like 1%? So that's 3%?
Getting clear. Yep, you're on the right track.
So 3% of the, what did I say, 60? Is that
3% of 300,000.
3% of
is-
300,000?
Yep. Is
Okay.
what? 9 grand?
I don't see a 9 up there. I mean,
So 3% of 300,000 is $9,000 plus the 20% down, which is 60,000.
69,000.
That's my guess.
Nope.
Incorrect.
67, 200.
67.2. Yeah, it wasn't as easy as 1%.
Wouldn't we subtract the 20% for the down payment from the 300,000?
Yep, that's what they did. So there are 2 components that you'll need to calculate. First, calculate the size of the loan. 300,000 times 80% is 240. So 240 is the loan they're taking out. So $60,000 is the down payment. Second, calculate the amount of the discount points using the loan amount and not the purchase price. Ah, that's what we did
Mhm.
wrong. So we did 3% times 300,000 instead of 3% times 240,000.
Okay.
I remember getting that one wrong when I tested a few years ago.
Sorry, I didn't have time to type it in. I was
That's okay. No
stuck punching
worries.
on this.
No worries. Any questions on that? So let's go to next question. Oh, see how we did. 80% on that one. We got 4 out of 5 that time. We're getting better.
So we passed.
We
Yay!
passed. Yay.
First one, woo, oh.
Can
Can
Hey,
we all
remember-
go together to take the exam?
yeah, right. I wish we could.
I'm starting to feel like I need my handheld. I may want you to go with me.
I know. Like.
All right. So for the last couple minutes of the test here, of our time here, I'm going to put my contact information in the chat. I'm the team leader here for Keller Williams Greater Metropolitan. So I'm a great person to reach out to. Clearly not for test prep since we failed everything tonight except for the last session. But if you're interviewing brokerages to try to figure out where you want to hang your license, you want to attend a career night to talk about the differences in brokerages from a non-biased standpoint. If you have questions about what you should be asking brokers, if you're thinking about, putting your license at a certain brokerage, I'm a great resource for all of that. So,
Okay, well, I'd like to make an appointment. I don't see your information in there. Did you put it
It's
in
in the chat.
already?
yeah, it's in the chat there.
I don't see it
I
on mine.
I came to the one of the open meeting nights for, I think you had 2 other people there with you, your top sellers,
Yeah. Oh, yeah, that was me and Sarah.
and a young gentleman.
Oh, that wasn't me.
I thought that was, okay.
Can you show me where in the chat? Because I'm looking at mine and I don't see anything in there.
Yeah, you scroll to the bottom there? You might need to scroll down.
Yeah, I end with Tony Hall and it just says DD. I
Can you
don't,
still see my screen okay?
I can see your screen, yes.
All right, let's do this. Let's go.
I reshared it.
Okay, now Chris Burns, is that?
Yeah, that's me.
Okay,
yep,
yeah.
that's me.
Thanks, Eric, because it wasn't in there.
I just copied and reshared it. No,
Thank you.
My thing, Chris, is I've decided I want you guys. That's who I want to come with.
Great.
It was between you and Berkshire Hathaway. And the thing is this is where I get back to that old school thing is, I guess I expect that hands-on thing where I get to meet somebody and I get to talk with them directly, where Zoom
Sure.
just doesn't feel complete.
Yep.
Maybe a little handshake and some guidance
Yeah.
is where I want to be. And I need to set up some sort of appointment for that next step, which is where I'm at.
I just put a link to my calendar in the chat for what I like to call a jumpstart session.
Okay.
So if anybody wants to book time on my calendar, it'd be here at the Lakewood office in our conference room. But book an hour with me if you're more of a one-on-one person and not a career night type person. If you're on the east side and you'd rather go to our Pepper Pike office, I can get you the email address of my counterpart for the east side. Her name's Kate Johnson, and you could reach out to her via email and book some time on her calendar as well, if that would help. So
I am on the east side, so I probably would go with Kate. Not
Yep,
because
let
you
me-
aren't personable or anything. I just an easier travel.
Yep, totally get it. Let's do
Uh,
this.
Huh, well, your email.
Let's copy
me.
this.
Fooled me for a second. I thought that was mine.
There's Kate Johnson's email address if you're on the east side.
Okay, so I live in Evendale, Cincinnati, so would that be you, Chris?
If you're in Cincinnati, what I would do is,
Well, I
Um,
live in Evendale, but I mean, I have a car, so I can drive. It doesn't, I mean,
yeah, I wouldn't come all the way up here for a jumpstart meeting. What I would do is send me an email to bernsey@kw.com,
okay,
and I'll put you in touch with a and like when you send me an email, give me your first name, last name, phone number, and email address, and I will put you in contact with the Keller Williams that's closest to where you're located, so you can pop in there for an appointment.
okay. All right, sounds good.
Still feel free to come to our Thursday night study sessions, though. These are open to anybody who's currently getting licensed or just has finished with the licensing exam prep and wants to just prepare for the exam. So, sound good?
Okay, yes, thank you.
All right, you're very welcome. And I believe either Kate or Kelly will be facilitating next week. I'll be in Vegas for the Keller Williams Family Reunion Convention, but I will be back the week after to be here with you. So, sound good?
Yes. All right, thank you.
All
I'm
right,
crossing my
thanks for.
fingers that I'll be in testing by then. But
All right, let's go. Good luck. Thanks
thank you very much for that email address for
Yep, for Kate, you
For
got
Kate.
it.
I'm emailing her now and reference you.
Beautiful. Thanks a lot, Eric.
Thank you very much, Chris.
Yep. Bye bye now.